Record highs persist in the US stock market. Nothing phases it. Threats from geopolitical turmoil, escalations of tensions, financial matters, domestic difficulties, and everything else has proved that there are no factors externally which can bring this market down, except, of course, the one which has made it rise. You came here for the truth, so let me unveil that for you. Today we are going to look at the US stock market. Let's begin. US stocks have now gone a record 395 days without a 5% reversal, underpinned by sustained low volatility. This has never happened before. I will show you the chart in just a moment. We are seeing now at this time the market continues to hit higher and higher and higher levels. Bond markets have been in mild retreat this week, most notably with the yield on the benchmark 10-year rising to its highest level since 2014. On Friday, the 10-year was up 4.4 basis points at 2.65%. So the dollar has been fluctuating as well over the recent past, and that is something to note and to keep an eye on. The sea of tranquility. US equity market enjoys longer ever streak of trading without a 5% setback. So it has surpassed what we saw during the 90s leading up to the dot-com boom and bust. When interest rates were at 5%, when markets were much more stable, when the national debt was significantly lower, when pension funds were more funded, when the stock market had a general desire for new growth, new expansion, companies were popping up, not just in the tech sector, but elsewhere. We saw a boom that was taking place. The 90s were pretty consistent, that's for sure. And there was a stretch where housing and the markets and everything were just rising. Interest rates were coming down. And we looked at it like a general, let's say, good economy that was happening. It wasn't perfect, but it was certainly better than what we have today. Yet, today, because of central bank easing, they've been able to push it even further. And it will continue. There's no doubt about that. As long as central banks are willing to manipulate this currency, they can do so at the expense of it. There is definitely no problem. Average, imagine this. The average is at about a 100. On average. 1929 to 1982. And if you think about it, how far it has gone right now, it's completely out of whack. But we're not allowed to talk about it because I know a lot of people are invested into the market and they're a little concerned, and they should be, that's for sure. And I don't mean to point out any necessarily negativity to anyone's decision making. I don't have any skin in the game. Whatever it is that you do, it is on you. I don't judge anybody for what they do. S&P 500 price to sales ratio. When you see that we've gone beyond the tech boom and bust, you know that you are in radical territory. It's ridiculous when you can see some markets that just don't make any sense. And you have all these different ratios, all the indicators, technical analysis, which shows you all of this. Underlying that, you see all the fundamentals, which support everything that you're seeing. But the market keeps going higher and higher and higher. And right now, it's just a straight line upward. Look at that. Everyone's talking about cryptocurrencies. Look at what's happening with the stock market. It's insane. Surely that's happened before, but right now, specifically at this time, there's nothing underneath it. In the 90s, at least, there was more that would be, backing it. Today, that just doesn't exist. That's what's so freaky about this rise. The S&P 500, I've shown you this before, right now at this time, it's escalating to new highs all the time. And it is, specifically on the RSI, the most overbought, the most overvalued it has ever been, according to this technical indicator. The most ever. Not the most this year, not the most this decade, the most ever. But who cares? Central banks are buying up shares, and that's really all that matters. What is your current net exposure to the equity markets? Should it surprise anybody that since March 2009, the market has been rising and people have been increasing their exposure to stocks? Look at what's happening with the hedge funds. Look at all these investment companies that are out there. They're pumping more money in. They're getting out of the fixed income. They're getting out of all different types of investments, and they're putting more and more money into equities, and that makes the stocks go higher, and then more money goes into equities. It just continuously has to go up. And what would make it come down at this time? If they reverse course on their easing programs. That's how this will define itself. And if the market starts to come down and they don't want it to come down, they will simply print money. They can print more money. They can reduce interest rates. They can bring them right into the negative if they choose to do so, forcing people to stop saving, put their money into riskier investments. And they want to basically keep up with inflation at the very least. And you will see that people will lose their money. It doesn't matter because the money is losing value so rapidly. If they're printing, you will notice that as time goes on, they're going to print more and more money. People are not able to deal with that. You have to understand, so many people are on a fixed income and other people are living right to the border of what they're able to afford. So when we have these changes, it doesn't look pretty. Well, that's all for this video. If you found it informative, please give me a thumbs up. Your thumbs up does support this channel, and I do appreciate that very much. I want to say hello to all the new subscribers out there. But, of course, I also want to acknowledge everyone that has been here for such a long time. I really appreciate all the support that I've gotten, all the kind words, all of the positivity. And just to basically say that I definitely appreciate all of the support in one way, shape, or form. Thank you very much. If you found the video informative, you'll find my books even more informative. There are links in the description below. Take care.